everyone. This is Dr.D.Kiruthika, Department of Commerce with Computer Application, Dr. SNS Rajalakshmi College of Arts and Science. A warm welcome to my YouTube channel, Learn to Win. Here we are discussing about the playlist uh, stock market. Today we are going to discuss about the topic of your OTC. As everybody know about it, the OTC is nothing but the over-the-counter markets. So let's enter into it. And here it is the description of what do you mean by the OTP. Actually, it is said as OTCEI previously, that is over-the-counter exchange of India, and it is an Indian electronic stock exchange composed of your small and mid-cap companies. The purpose of the OTCI is for smaller companies to raise the capital, which they cannot do at the national exchanges due to their inability to meet the exchange requirements. So OTC, it is like unlike your traditional exchanges, it is a functions as a decentralized networks, and here the participants the trade securities directly with the involvement of a centralized marketplace. This realm offers a wide range of your financial instruments compared to the exchange traded markets, catering to diverse investment needs. Here's a breakdown of the OTC markets, that is the key characteristics we are going to discuss in deep. Before that, we have to understand the establishment, when it was founded, everything. The OTC Exchange of India was founded in the year of 1990 under the Companies Act 1956 and was recognized by the Securities Contract Regulation Act. I repeat, the Securities Contract Regulation Act 1956 as a stock exchange. The OTCI is no longer a functional exchange as the same has been recognized by the SEBI, that is Securities Exchange Board of India. Uh, Again, this key characteristics involves, first one is regarding your decentralized, that is the trading occurs directly between two parties, and it is often through the broker dealers, eliminating the need for an exchange flow. So it is a decentralized one. Another one is your wider range of your instruments. OTC markets trade not only on the stocks but also on the bonds, derivatives, currencies, and other financial products, providing the greater flexibility for the investors. And to be very specific, the OTCA implements specific capitalization rules that makes it suited for the small to medium sized companies while preventing large companies being listed. The key players in your OTCI are your brokers, market makers, custodians, and transfer agents. And the other key factors involves, it is very less transparent. That is, due to the absence of a central platform, price discovery and the trade information may be less readily available compared to the exchange traded markets. That's why we say that it is a very less transparent one. Another one is your lower liquidity. There are certain OTC instruments, especially those for the smaller companies or less common assets, may have lower liquidity, making it challenging to enter or exit the positions quickly. And then higher potential risk, the OTC markets may involve less regulation and oversight compared to the exchanges, potentially increasing the investment risk. So these are all the very important key characteristics of your OTC, that is less transparent, liquidity, and your higher potential risk, everything. And then what are the types of your OTC, over the counter markets? The first one is your dealer market. As we already said, that the players like your brokers, dealers, everyone is there. So here the types of the market also depends upon them. One is your dealer market. The broker dealers act as a market makers, putting bid and ask prices for the specific securities and facilitating trades between the interested parties. That is inventory, earning commissions on facilitating transactions, everything. And then next one is electronic communication network. The automated platform collects buyers and sellers electronically, matching the order based on the price and time priority. Examples of your OTC traded instruments, one is your corporate bonds. The bonds issued by the companies directly to the investors, often through the private placements. Then forex exchange, which is most important for your global market. The global market for trading the currencies directly between the banks and other financial institutions. Then next one is your derivatives, complex financial contracts like your options and swaps, often traded privately between the sophisticated investors. Unlisted stocks, the shares of the companies that don't trade on your major exchanges. Then investing in your OTC market, it is highly suitability standards and then thorough research and seek professional guidance. Higher suitability standards due to the potential risk. Some OTC markets may have stricter suitability requirements for investors, ensuring they understand the complexities involved. The next one is your thorough research. Carefully research the specific instruments and issuer before investing in the OTC market, considering its risk profile and your liquidity. And then consulting a financial advisor, that is an experienced financial advisor in OTC market, can be beneficial, especially for your complex instruments or unfamiliar issues. That is why we are seeking with your professional guidance. So these are all your important basics regarding your OTC. In this we are discussing about the various terms which is involved in your stock market. So in this particular video we have enough discussed about your OTC. Further we have more interesting topics related to your stock market, so kindly keep in touch. Thank you for subscribing. Thank you.